Hello everyone and welcome to today's major markets update for Wednesday, September 7, 2022. It looks like all the major indexes have bottomed so far in the ideal wave 3/C target zone, and now we can let the markets decide if we only got 3 waves lower, A, B, C, for a B wave, meaning a more extensive C wave is underway, or are we going to see a impulse lower, the 1, 2, 3, 4, 5, with this smaller wave 4, underway, should be a little bit longer in time and in price, and that will set up nice positive divergences on the technical indicators once wave 5 gets underway. So we will get a lower low with increasing strength in the technical indicators, which will then cause the next larger counter trend rally, a multi-week wave B or 2. That said, let's go straight to the charts and see where we are. These are all the slides you will get with the summary, of course. We'll get there in a moment. Start off with the Dow Jones. Here is the expanded leading diagonal option for the Dow Jones, which I also have for the S&P 500. There are also, of course, bullish interpretations to this price action, meaning that we are already in the starting gates of a new bull market as I think it could be a leading diagonal wave 5 or ending diagonal wave 5, etc. I don't like them too much at this moment, but please be aware that due to the extreme price overlap that we've had since the all-time high, look here for the Dow Jones going from about 37,000 down to 29,000, back up to 35,000, with in between some very serious overlapping rallies. It means the Elliott Wave is difficult to interpret. The Elliott Wave itself is simple in that sense, but the interpretation is difficult. Which Elliott Wave count are you going to assign to all this messy overlapping price action? I shared that with you on Friday as well, using the 2000-2003 market correction in the Dow Jones. Anything you will throw at that for ABC labels will stick. So we might be in a similar environment. For now, we focus on this 1, 2, 3, 4, 5 setup. The 3 looks to have bottomed. 4 should top here between 32,000, 32,250, and then wave 5 down to ideally 30,250, 3,500. A bounce back here to about the same zone as this wave 4, and then we get 3, 4, and 5 underway. Okay, this wave count will of course fall apart if we go back above this infamous low made about a day and a half before the infamous Powell scruples all on Friday speech. That is our cutoff, okay? We do not want to see this potential wave 4 move above it, similarly as we did for the rally since the June low. We were tracking for potentially 5 waves up. Well, that didn't happen because we overlapped with this June rally high, so that cannot be a wave 1, it must be an A, because fourth and first waves cannot overlap, only in diagonals, but diagonals are unreliable and not my preferred view. So here is an alternative that we are completing simply an ABC lower, ABC lower since the all-time high, with now wave 4 and wave 5 yet to come. False breakout, nasty, sneaky, tricky, very possible as well. So here is then the third option, that again, if we break above this low here for the NASDAQ100, by the way, this is the NASDAQ100, if we break above 12,900, that is the cutoff, as I showed you for the Dow Jones. 12,900 is cutoff. If we break above that going forward, then I'm going to look for this C wave here for a larger B wave. Okay, this is still very possible. But 12,900 is the cutoff for this wave count. If we have a simple CSA relationship, don't know yet, then that should target somewhere there at about 14,600. As you can see there, that is the target. Okay, very simple. And that would allow for an almost full retrace of this diagonal path. But I cannot tell you that till we are above there. So alternatively, of course, we see this. I think this wave 4 should last a little bit longer. and then this. I'll show you that in a moment, okay? That is, for now, the preferred path, the gray path. Similarly, for the S&P 500. The S&P 500, here we have then wave C of wave A. Okay, it is all there on the charts, nothing new, so to say, nothing new. And this is then wave C. Let me take this away. So we've bottomed right here in this ideal target zone for wave C in red. We've bottomed right here in this ideal target zone for wave B in black. So far, so good. We cannot go over 41.17 to keep this 3, 4, and 5 impulse underway. So above 41.17 means this is going to happen, in my humble opinion, with, of course, a few twists and turns, and of course, resistance is right there, that we knew already, and that will then be a nice C wave. Again, this is then a simple C is A relationship. So there's some uncertainty here between where we are now, so to say, and 41.17. But above it, then we have only done, in my humble opinion, 3 larger waves lower. And the alternative, as I said, is the 3, 4, and 5 lower, as well here for the S&P 500, 3, 4, and 5. That will set up a wave 1, large 2, bigger 3, 4, and 5 for this expanding, leading diagonal wave A of the supercycle 4, and that's only wave A of supercycle 4, okay? Please keep that in mind. I've shared with you the longer term perspective, which will be a multi-year bear market, which will be mostly sideways for the initiation of the A, the B sequence. So here is work by Xena of XT Financial Services. This is on Twitter. You can follow her work for free. She doesn't post too often, but what she posts is really good. So also here we have the potential for a 3, a 4, and a 5 of wave 1. She sees that as well, with a low between anywhere, I would say 3,700 and about 3,870. All right, is that what I'm seeing as well? Here, there you go, 37. I have about 3,770 and about 3,830. Okay, simple, standard Fibonacci based. Or we get a wave C, again, between about here, 43.25, 45.75. Okay, I have it here between 43.72, 45.45. Bingo, somebody's copying somebody's work. Anyway, so these are the 2 main options she's tracking. Again, we might have this other option for the simple C wave lower, and that is then all of a wave A with a failed wave C. To be determined is my least preferred, but this is the 3, 4, 5 sequence. That's the bottom line here, the 3, 4, 5 sequence versus the ABC sequence. So S&P 500 above 41.17. That is the cutoff, okay? ABC lower, picture perfect. So what she's seeing is what I'm seeing, and what I'm seeing is what she's seeing. I like it if we agree, and now we'll let the market decide which one it will be. I prefer the 1, 2, 3, 4, 5 lower, but we know the price levels to watch. Cutoff levels must be respected at all times going forward. That's why we were able to successfully navigate this market, because we got the overlap with the wave 4. As I said before, the bulls will say we'll get 5 waves up. The bears will say we'll get 3 waves up. The bears were right, that's fine, but nobody knew with certainty beforehand. The only way is to label it A and 1 till, or 3 and C, sorry, till we get either 4 and 5 or not. We didn't get it. Great, well, so be it. This is then the semiconductors bottomed right here in wave 3, should now be on our way for wave 4, and then a wave 5. I like it, especially considering how oversold the technical indicators are, which are normally much better set up for a 3, a 4, and a 5 setup. Look here, for example, at the NASDAQ, very oversold, very strong to the downside, very strong to the momentum, very oversold. Okay, so that is often a sign of a 3rd wave. Same here for the IWM. This is classic, more 3rd wave. You get the 4th wave and the 5th wave, just like we, and then you get the positive divergence. Okay, then we get the positive divergence. So then we should have the A, B, and then of course here, of course, also the potential for the A, the B, and the C, just as I showed you for what Xenia did for the S&P 500. 1, 2, 3. or C. So it's question mark B. We bottomed right at 161.8. That's reserved for C waves and third waves. So now we are already very close to the wave 4 target zone of 184 plus or minus 1. We got to 182. I do want to see it move a little bit higher, a little bit longer for the next 2-3 days. And then a wave 5 would be picture perfect. That, of course, will reshape the entire landscape of what to expect next. But then we already have our preferred path on the table, which is the this path, right? The 1, 2, 3, 4, and 5 path, as I showed you, the 1, 2, 3, 4, and 5. So we have all our options on the table. Also here above 190, and we can visit 215 to 220. The CSA relationship is about 217. So that's the cutoff for all the indexes. We still haven't done 5 waves lower, not yet, not in my humble opinion. Let's look at market graph. Here we have the McClellan oscillator for the NASDAQ100, extremely oversold, as oversold as in March of 2020. What I do want to point out here is these extreme breadth readings we had here in March and May of this year. Normally, those are reserved for continuation breadth thrusts. These ones have been exhaustion breadth thrusts. They occurred right here close to tops, and then we went much lower. The only time that happened so far since 2020 is here in October of 2020. We did drop, but then we marched higher. We didn't make a low below the March lows. All right, we didn't even make a low below the September lows. That is quite different from what we're seeing now. Look here at the breadth thrusts we had in April, a little bit of a pullback and then continuation. Negative divergence, but continuation in price. That we did not see right now, so this starts to suggest that the market environment is changing. So now strong readings are more exhaustion signals, whereas in a bull market, they were continuation signals. If we look at the McClellan oscillator for the NYSE, also extremely low at minus 100, but that has happened about 17 times in its history. And it's a little bit of a wishy-washy outcome. Most of the time, these very low readings happen at exhaustion lows, but it doesn't mean it's the low, all cases. Very often, it is simply a low before we get a bounce and then a lower low, set up positive divergence, and then we get the bull market. Please note that all of this is irrelevant if we are in a supercycle 4, because all the data is in a supercycle 3, and then we're comparing apples to oranges, just as I mentioned with the exhaustion peak versus a continuation peak. Then we look at the McClellan oscillator for the S&P 500. I believe we have the slightest of positive divergence between yesterday's low and last week's low. Strong rally. Again, these are in viable bottom levels, as we saw here, just as we saw here. And of course, extreme oversold here in February, March of 2020, but not even comparable to where we are currently. Anyway, these are always good viable zones, and that has now materialized. The bounce should be underway. New lows is rather benign. It's too high. It should be above 50, because when we're above 50, good things tend to happen. We're in the hundreds. That is too high, but not as bad as we have had all year. Can always change, but for now, this still suggests a reasonably benign pullback. Last but not least, the buy all, sell all indicator. It is in the ideal bottom zone since the last 2 days. So that suggests we are bottoming out. It can last a while before it really happens. It is not a perfect indicator, but just as we topped here in July and August, now we're bottoming here in September. So this also suggests we should soon see a bit stronger counter trend rally into the ideal top zone once again. Bonus chart, Tesla. Back here in late August, when I last shared it, I was looking for this potential running flat question mark, where the bounce went slightly above the top of this green wave 3. We had 3 waves lower, ABC, clearly 3 waves up, ABC, and technically enough for a C wave, why I labeled it as a potential running flat. We did rally, failed utterly, and now we made lower lows in an impulse fashion. So it seems like instead of a running flat, it turned into an expanded flat, okay? From a trading perspective, One could have tried to long this for the potential wave 5, with of course a stop here at the low made at this what is now wave 1. You get stopped out, you're wrong, it's fine, it happens. No trade can all be winners. Arguably this trade here was of course the best trade one could have done. I said, this is the ideal buy zone. Place your stop here at the May low, never got hit, and you would have had tremendous gains. It takes a little while to sit on those before things turn the right way, but as long as your stop is not hit, it's not hit. That's the way it goes. We have not invalidated any of the overlaps that we were tracking, so far so good, and it looks like we have an expanded flat. Now, since we have had this corrective pattern for almost 6 weeks, it might make more sense to update the wave count to a 1 degree higher fourth wave, and now in this final fifth. Make still for an ABC lower, ABC, 1, 2, 3, 4, 5, ABC, ABC, picture perfect. A flat is 3, 3, 5. No overlap with this wave 1A. And as long as we can hold yesterday's low, we can now target ideally around 330. Please note with this wave count, we clearly topped very close to the ideal target for the third wave, which is 161.8 at about 309. And we bottomed very nicely, very close to the ideal target zone of 273 on a closing basis. It did very well, and potentially about the 76.4% retrace, but no overlap. So far so good. Once we see overlap, things change. We might turn this into a leading diagonal, but I'm not going to count on it. So this looks good. This is the bonus chart. All right, that is what we're seeing right now. So looks like wave 3/C has bottomed, right in the target zones for every single index. Bonus. Perfect. All indexes align, therefore, with this preferred fourth wave bounce, and then a fifth wave lower. The fourth wave bounce will reset the technical indicators ideally, and then the fifth wave lower will be a positive divergence ideally, and then we get the larger counter trend rally, in this case a wave 2/B. The two main alternatives are this fifth waves lower, 5 waves lower, all right, and then the wave 2, and then 3, 4, and 5 for that large expanding leading diagonal I showed you. However, if we go through the low made before the Powell screws us all on Friday day, then we have a larger ABC on our hands with the August high wave A, currently wave B, low in, and now in the starting gates of wave C. This will only be confirmed if we don't get 5 waves lower and if we do break directly through that low made before the Powell screwed us all on Friday day. Okay. Again, above the fourth wave target zones on daily closes starts to already increase that item number 2.2 is at hand. But for now, item 1 and 1 are preferred because the technical indicators are so well aligned with a 3 wave degree. Last but not least, bonus, Tesla is preferably now in wave 5 of wave 1. If yesterday's low holds, upside target is 330. If yesterday's low doesn't hold, then all bets are off. Thank you so much for listening. I hope you appreciated this update. Take care, trade safe. If you have any questions, never hesitate to contact me. Have a great rest of your day.